Hey, what's up, guys? So the GammaEdge here, coming in at you with a late night review of the markets for April 28, 2025. So today, if you check the open, check the close, you think nothing happened in the market, but we had a nice two-sided action today. Let's get into that. We'll start with the pre-market prep to get into the intraday tools. So coming into the session, right, starting out with the market trend model, something we always do. Not going to go into the depth into this. You can watch our pre-market video or, past videos where we go into exactly what this is, but this is our market trend model built off the tick index. Helps us understand the intraday, short-term, long-term trends in the market. Measures underlying buying and selling in the market. So right, last week we saw a nice reversal beginning of the week, then we saw a continuation throughout the week. Bullish state ending Friday coming into today. So, if you're a bull, you want to see this continue sideways to higher. Want to see filtered tick buying come in as well, which is simply just a measurement of large significant buying or selling in the market. So right, just coming from that point, kind of from a swing trading point of view, things are looking more constructive in the market. But next, that's why we go look at the options market, specifically we look at SPX. Reason for that is A, the options market is forward-looking, so we inherently can understand how speculators are positioned out in time. B, a significant amount of the activity in today's market is transacting in the options market, and understanding the SPX, which is large, liquid, deep markets, gives us a great kind of indication on the general market by understanding the positioning within that. So looking at SPX, specifically SPXA, which is the complex where longer term, slower moving money is positioned as a compared to the SPXP, which is kind of your shorter term traders. So again, SPXA, this is your monthly, this is your quarterly expirations. Here we can see that there has been improvement in the market. By that we mean, below spot price, the market is call dominated. Above spot price, there's a mix between call and put dominated strikes. You want to see that cleaned up, become more call dominated. But, relative to the last week or really the last couple of months, this is starting to look more constructive. And then moving on to SPXP, again, this is your daily, your weekly, your 0DTs. This is your shorter term speculative contracts. We call this a speedboat, and SPXA is your cruise ship. So again, here, put call dominated above no spot price. Good to see. Top of our transition zone is 54.80. So simply what that means is we just want to stay above 54.80, continue being a call dominated zone. If we were to drop into this blue transition zone, we expect choppy price action. We can see that's where call and put dominated stocks are kind of alternating. So again, good level of reference that we do want to hold on a full complex time frame. And so before moving on to 0DT, just things I want to point out, highlight as part of the pre-market prep is market trend model. This was constructive, trending higher, improving day over day, SPXA. This is improving day over day as well, starting to become more call dominated. SPXP, this is call dominated, has been improving day over day. So, from a kind of an overall market health, things are improving. From a swing trading time frame, things are improving. Now, yes, I know there's a lot of factors. You go on Twitter, there's a million reasons why the market shouldn't be going up, this and that, tweets, news, all that good stuff. But, by the way that we measure the market, which is literally how people are voting via their positioning, things are looking more constructive. Now, tomorrow, the structure could change and it could deteriorate, and we will adjust accordingly. But as of going into today's session, this is what the market data was telling us. Now, moving on to SPX 0DT complex. A couple things I want to highlight for you real quick is pink zone. This is the expected move implied from the options market. We have the blue and the white zones here. This is our DEX and our DEX and GEX transition zones based off of delta and gamma and the distribution of call OI in the options complex. So simply put, within this zone, we expect to see choppy price action. Below this zone, this is where it kind of the put dominated structure starts to come into play. So we would expect, if the market trend model is trending lower intraday, we have intraday volume trending lower intraday. Below the bottom of the transition zone, we would expect to see sideways lower price action, vice versa to the upside. So long as we can hold 54.85 and the market trend model in our intraday volume analysis is constructive to the upside, then we again expect to see sideways to higher price action. All of that, though, is taking us to what we call our drunken sailor range. This is the orange box here. And so The whole purpose of this is, within the drunken sailor zone, even though we may be through the top of transition, we can still see that the influence of call dominated strikes is relatively small. So within this zone, up through 55.50, this is where we need to see intraday volume really manifest. And by that, what we mean is we need to see the actual opening of calls, which would be driving speculation higher. Reason for that is because the actual opening and closing of calls and that adjustment to delta is the most powerful force that can happen on an intraday basis. And then market makers and the moneyness of options kind of take a back seat, but do react to the opening and closing of those calls. So above 55.50, we would be expecting a move. 5,600 could be in target, but it would be really clear for 55.50 to be cleared. And then we even kind of talked about in the post-market video how 55.20, 55.25 is also kind of a secondary kind of goalpost that the market needs to work through. So just working through the chart real quick before getting into our intraday tools, have the key levels marked out for us. Those being the top of the drunken sailor range, 55.50, 5,500 down here, and that kind of 55.20, 55.25 congestion area we talked about as well. And so off the open, we had a nice push higher, but again, could not push to the top of the drunken sailor zone. That's why we have it marked, because it's a key level, right? And just we're not able to see that expansion in call speculation higher to get us pushing through that. And then, we got back down, we chopped around the opening print for a while, then we eventually started to melted down throughout the session, went down to 55.65 or 68, sorry, which is, was near the bottom of our DEX transition zone coming into the session. Is that the reason why we stopped there and went higher? Would love to tell you less, but yes, but ultimately have no idea. Again, right, those are just kind of key reference points that we like to reference throughout the session. And again, right, there was confluence with that level, but was that the exact reason why we stopped and went higher? Maybe, maybe not. Doesn't really matter though, because we use our tools to inform us, of this move higher, of this push higher. So let's get to that. And first, what I want to talk about is the market trend model again, right? We did see some weakness today. That this green line is price action. Did see some weakness intraday, but the market trend model, the intraday cumulative stick, really did not trend lower at all. And we didn't really see any significant selling. If anything, we actually saw significantly buying when we were selling off a little bit. So that was kind of a tell. And right, this is kind of the function of, right, the Mag 7 was really underperforming into the morning while the rest of the market was holding fairly steady. And then, right, again, that's kind of a reason why, weren't super excited to press the gas short, because everything coming into the market today was constructive higher, and really weren't seeing any, massive impulses lower telling us that, yes, the market is rolling over here. And then right here, we have our intraday volume analysis. This is called the volume momentum chart, vol M. What we're doing here is every 5 minutes throughout the day, we're aggregating SPX 0DT call and put volume, finding the middle of those distributions, which is called a centroid, and we're plotting those centroids throughout the session. So every 5 minutes, plotting those centroids, we connect the dots for you, and we form the solid green and red lines. The reason that's important is because at any point from the open until a specific point in time, we can see what those distribution of centroids are, which reflect market behavior and market sentiment and market transactions. So as an example, from today, from the open to noon, call centroids, that call speculated behavior was trending lower to sideways throughout the session. And on the flip side, the put side was kind of sideways to higher on the session. So that's kind of a choppy signature. Not only that, not only does it help you understand the character of price action, which is, choppy versus trending, we can also understand, right, given what the direction of centroids are, we can kind of project out where those centroids are likely to go throughout the rest of the session, all things equal, right? Price follows where those centroids go. That is kind of a rule of thumb that we use. And so, right, just using that noon example again, if call centroids were doing this behavior, then we would expect that to continue through the close. Same thing on the put side right here, kind of sideways to higher, we expect that same behavior to happen through the close. And then, right, as we go from noon to 1, we get more data points, 1 to 2, get more data points, and that's going to impact our, we call it the line of best fit, but kind of our understanding of where price may be headed. And so, right, kind of the good part about this command is, while it was 130, everything was pointing to us trending lower using our intraday volume analysis. You may have been wrong, but this tool helps you because, if you were shorting and, obviously we didn't continue to press lower, we started to see a reversal. We can also see that the centroids were starting to trend higher as well, especially that put centroid was not really waterfalling lower. So what that means is there's not a ton of put speculation, expecting a lower move. And when we see those continued moves lower, we start to see kind of really aggressive move from the put side, and then the call side follows. But here we could see, that call side was starting to move higher, or sorry, put side was starting to move higher. Call side was kind of starting to move sideways to higher, right? And right, that's also where it's important to couple that with the market trend model. Again, we were not seeing anything aggressively to the downside, nor were we seeing any aggressive selling. And then right once we got back above that 5,500 level, we were just able to carry that momentum higher through the close. And then again, as we just continue to move throughout the session, that's what we're continuing to see is that call centroid is starting to progress higher above that line of best fit, right? And then that's where I'm saying all things equal, this is what we would expect to happen. But as we can see here, call speculation is starting to ramp higher, put speculation is starting to ramp higher as well. So yes, you could go short if you wanted to up here. However, just keep in mind the environment that we were in. We were above 5,500 or right at it. Market trend model was not breaking down, and our intraday volume analysis was showing evidence of a progression of speculation higher. And then right, that just continued until the close. And then just recapping that price action, what we do is we stitch those 5-minute charts together, create a GIF that we can watch at the end of the day so we can see everything was trending lower, right? And then eventually, price kind of stalls out and we really start to see that ramp higher. We start to see our lines of best fit continue to move higher as that call speculation, put speculation really ramp higher. We literally had someone in the community today saying, we were around this point or whatever, saying, hey, good time to sell credit spreads. And we were saying, you know what, maybe not. Reason for that is because we weren't really seeing any evidence of continued downside speculation. And, we're starting to flirt with 5,500. That was VWAP on the day, all that good stuff. Market trend model was constructed to the upside. And we started to see those call centroid really start to trend higher as well. Today is a good example of kind of showing the full gamut of this, where we have a downtrending, then we have kind of choppiness, and then we see that reversal come through higher. So whether you're kind of an intraday scalper, whether you're a credit spread trader, hopefully you can kind of understand the utility of this tool, and not only kind of helping you understand the character of price action, whether it be trending, whether it be choppy, understanding where price is likely to head based off of what has happened, and then kind of understanding what our upper and lower bounds are for price action itself. And then right, for those folks that are in the technical analysis, I just have this plotted here for you guys. The blue line is the opening print. This white line here is VWAP. This yellow is prior to VWAP. So you can see in this area right here, again, we failed to progress higher to get above the drunken sailor zone. And we saw a lot of choppy price action in here. This is the opening print. This is VWAP. This is 52.50, 52, 55.20, 55.25, which again was kind of that key little goalpost in our pre-market plan. And then once we kind of lost this level, waterfall lower, stopped near the bottom of our DEX transition zone, then we saw a reversal in market trend model, saw a reversal in our volume command, and then we progressed higher right back to the opening print. So with that, hopefully that made sense. If not, then we're gonna have a pre-market video, we're gonna have a post-market video. Try again tomorrow. And with that, you guys have a good night, and we'll talk to you later. Thanks. Bye.